The most deadly housing crash just happened in New Zealand modern history. Wellington, the capital, saw property values absolutely decimated, with some areas losing 30% from their peak. We're talking about over $400,000 wiped off single properties. Wellington City-West is down 29.9%. Wellington City down 27.3% from peak. This is New Zealand's capital, the government employment hub, the place where property was supposed to be bulletproof because of public sector jobs and limited land supply. And it's leading the country's housing crash. Wellington Central just recorded the steepest annual decline of any area in the entire country, down 13.3% in a single year. But here's what nobody's talking about. 5 years ago, Wellington property was booming. Today, the Wellington region is only 7.4% above where it was 5 years ago. That's just $58,000 in gains. 5 years of paying rates, insurance, maintenance, and mortgage interest, and you've gained $58,000. That barely covers inflation. Homeowners who bought at the peak in 2022 are sitting on paper losses exceeding $400,000. Equity they thought was locked and has evaporated. People who refinanced to pull equity out are now underwater. And the employment uncertainty hammering Wellington? It's getting worse. Job market fears are stopping this market from recovering, even as interest rates plummet. So we're breaking down exactly what happened to Wellington, why the capital got hit harder than anywhere else, and what this means if you own property there or you're thinking about buying. Everything you're hearing is sourced from Quotable Value, RAIN's market reports, Cotality data, Reserve Bank analysis, and verified news reporting. Official statistics only. We're covering 3 things: the scale of Wellington's crash, actual numbers suburb by suburb, why Wellington got hammered harder than anywhere else, and what this means for homeowners and buyers right now. Let's get into it. Wellington property values are down close to 30% from peak in some areas. Wellington City-West leads the carnage, down 29.9% from peak, with over $400,000 lost per property. A $1.35 million property at peak is now worth $945,000. You've lost more than most Kiwi families earn in 5 years. Wellington City overall is down 27.3% from peak. Current average is $938,000, down $35,000 annually and the lowest since COVID. Greater Wellington is down 3.3% year-on-year. The region median fell 2% in 2025, down 0.8% in the final quarter alone. Now Wellington Central, the inner city suburbs closest to Parliament, the Terrace, and Thorndon. Wellington Central recorded the steepest annual decline of any area in the entire country, down 13.3% annually. That's worse than Auckland, worse than anywhere. Wellington Central is leading New Zealand's housing crash. Even Carterton in the Wairarapa recorded the largest quarterly drop nationally. Why? Because it's tied to Wellington's employment base, and that base is in serious trouble. 3 massive forces converged. First is employment uncertainty. Wellington's economy is heavily concentrated in government and public sector jobs. When restructuring happens, when departments get cut, Wellington feels it immediately. Kelvin Davidson from Cotality said job market uncertainty has more than offset the positive influence of lower mortgage rates. Even with the Reserve Bank cutting the OCR from 5.5% to 2.25%, that's 325 basis points, Wellington hasn't recovered. Why? Because people are scared. They're not buying when worried about losing jobs. That fear is justified. Public sector restructuring, spending cuts, and department relocations all hit Wellington directly. Compare Christchurch, which is up 2.6% in 2025, or Queenstown at new peaks. Those regions aren't dependent on government employment. Wellington lives and dies by the public sector. Force 2 is the peak price penalty. Wellington's values surged during COVID. Prices went parabolic in 2020 and 2021. Those peak prices were built on ultra-low rates with the OCR at 0.25% and mortgages at 2.5%. When the Reserve Bank jacked rates to 5.5%, borrowing costs doubled or tripled. Unlike Auckland, Wellington doesn't have the same volume of high-income buyers. Auckland has corporate jobs and employment diversity. Wellington is narrower, so when affordability collapsed, fewer buyers could step in. Force 3 is oversupply. Wellington stands out as one of the most well-supplied markets. Both real estate and rental inventory are elevated. Compared to pre-pandemic 2017 to 2019 levels, Wellington's supply is 70% to 80% higher than historical averages. Rental vacancy rates are higher than almost anywhere. Rents are down nearly 10% in late 2025, down 11.8% from peak. Why? Net migration fell to 2.5-year lows. International students and young professionals who filled rentals aren't arriving. First home buyers, who now make up 33% to 39% of Wellington purchases, are leaving the rental pool. The rest are cautious, staying put because of job uncertainty. Here's one bright spot. First home buyers are the strongest market segment. Wellington has the highest proportion of first home buyer activity in the country, between 33% and 39% of all purchases in late 2025. Compare that to Auckland at 29% or the national average of 28%. Why? Because prices crashed. A property that was $1.2 million at peak is now $850,000. That's within reach for households earning $120,000 to $140,000 combined with KiwiSaver deposits. Mortgage rates are falling. Average mortgage yield dropped from over 6% to 5.4% as of November 2025, and it's expected to hit 4.7% by September 2026. But first home buyers only prop up the lower end, the $700,000 to $900,000 range. They're not buying $1.5 million homes in Kelburn or Oriental Bay. Properties there are down $600,000 or more from peak. Those suburbs appeal to move-up buyers and investors, segments that have been crushed by interest rate hikes and job uncertainty. First home buyers are keeping Wellington from total collapse, but they're not enough to drive broad recovery. If you own Wellington property, you're likely sitting on significant paper losses. If you bought at the 2022 peak, you might be underwater. The data suggests we're near the bottom. The Reserve Bank cut rates aggressively. Inflation is back in the target band. The RBNZ forecasts only 3.8% capital gain in 2026, which is modest, not a sharp recovery. If you can hold, the worst is likely behind you. But recovery will be slow. Don't expect 2022 peak values anytime soon. Think years, not months. If you're a buyer, Wellington offers opportunities. Properties sit on the market. Sellers negotiate. There are no multi-offer bidding wars. But be realistic. You're buying into a weak market. Employment uncertainty remains the biggest risk. If public sector cuts continue, Wellington could stay flat or drift lower. Rental yields are compressed. You're not buying for cash flow. You're betting on long-term capital appreciation, which is a bet on Wellington's economy recovering. Let me pull this together. Wellington property values crashed 30% from peak in some areas. Wellington City-West is down 29.9%, which is over $400,000 loss per property. Wellington City is down 27.3%. Wellington Central recorded the steepest annual decline in the country at 13.3%. Three forces drove this collapse. Employment uncertainty is the biggest headwind, with public sector job fears keeping buyers out of the market. The peak price penalty, where ultra-high valuations met collapsed affordability when rates spiked. And oversupply, with inventory 70% to 80% above historical averages and rental vacancies at multi-year highs. First home buyers are the bright spot, making up 33% to 39% of purchases. But they're only propping up the lower end. The upper end remains stuck. Here's what you need to remember. Wellington crashed harder than almost anywhere because its economy is too reliant on public sector employment. We're likely near the bottom, but recovery will be gradual with only modest growth forecast for 2026. If you're buying Wellington property, you're betting on long-term economic recovery, not short-term gains. If this breakdown was valuable, hit that like and subscribe button and press the bell icon. We're tracking New Zealand's housing market with verified data and real analysis. Drop a comment your thoughts. I am genuinely curious about the ground reality. Thanks for watching. I will see you in the next report.